In this video, we're going to talk about a pullback versus a time to sell. Hi everybody, my name is Michael Lamott. I am the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And today, the way that we're going to do that is by answering Daniel's question about when we see a stock pull in hard, is it a sell signal or is it just a pullback, and how do we differentiate? So let's take a look at some charts and dive right in. So the example that I want to give you is Adobe. Adobe is another stock that we purchased for our model portfolio in the advanced stock reports service that we offer. This is one that we purchased back in January of 2017, and we have held, and we are still presently holding as of December, well, what's today? December 27th, 2017. That's when I'm recording this video. It'll probably be published by Friday. But anyway, so still holding Adobe, and it's had some nasty pullbacks. So let's dive right into this chart here. So to start off, we purchased it way back here in January, and our initial stop, we like to use tight stops, right? So we want to be proven wrong right away, and then as the stock works, we want to give it room. And because we're still trading this for our model portfolio, we're following an intermediate term basis, and any of the rules or signals or anything that we apply can always be adjusted for any other time frame you want. If you're trading shorter term, just use shorter term trends and moving averages. If you're trading longer term, so holding for a year or greater, then you could adjust for longer term moving averages, trend lines, support levels, etc., and use longer term charts. But for what we're talking about right now, we're doing that sweet spot right in the middle and talking about that intermediate term. So we end up entering right here as Adobe breaks out of this cup with handle base. It broke above resistance, a short-term resistance, right around here. Get this trend line going, this resistance level, and it breaks out, and it does it on a halfway decent volume. We always like to see volume accompany any move, but volume should be considered secondary. What matters more is the price action. Sometimes volume comes in later, and we also want to look at volume as an aggregate, not just on one day, but we want to see patterns emerging. So is there volume coming into or leaving the stock? Basically what we're trying to figure out is there demand or not? Is there more selling or is there more buying? Well, what's going on? So we look at this chart here, and let's take a quick peek at the weekly chart. And we ended up buying this back in January. So we're looking right over here, and you could just see the support right along that black line. That's the 40-week line, right? So let's make this a little bit bigger here. And Adobe was in this uptrend, and there was a big shakeout there, but since then too, and really all along, it was kind of getting support right around that black line, that 40-week line, and it got support right there pretty perfectly. And because it was trending higher and it was consolidating, and you also notice that these consolidations are getting tighter and tighter, that's another thing too that made us want to enter right there. But let's go back to the daily chart, because we're talking about selling and not getting shaken out. So here we go. Adobe continues to run, and we're following the 3-strike pattern that we discussed in the prior video. So if you haven't seen our 3 rules video for selling, definitely check that out. I'll include the link to it in the description here. But anyway, so we're writing this trend along, and we see this happen, right? So back in June, pretty nasty shakeout, right? very nasty 2 days of selling. You get this really big volatility, kind of out of character for the stock, and that's the first big test, right? So you had, in 2 days, you experienced about a 9% decline in the stock. And this isn't a stock that typically moves that much, right? It's not experiencing that volatility up to from when we bought it in January. So very out of the ordinary. And did it undercut that day? No, it didn't undercut this right here. Right, so that would have been our three, well, would it have been 3 strikes? I don't think that it would have been 3 strikes at that point. Let's draw our trend lines. Well, we're constantly updating these things. So let's see, this right here, even that's more of a shorter term, right? Because we're looking at intermediate term, we're looking at weeks, months, possibly holding for up to a year, possibly even a little bit more. Adobe's on the cusp of being held for over a year. We'll see what happens. But this upward trend line, that's more of short to intermediate term, so we're not really using that. What we're looking at is the 50-day moving average, that red line, so it did break that, but we're also looking at support. So support would have been right down here at this point, right? So it tested this level over here, and that's right around where we were keeping our stop, and it didn't trigger that, and it just kept on rallying. So we like to keep, when we're trading on an intermediate term basis and we're trying to hold for the bulk of the move, that's the purpose of this particular account. And another point that I want to make too is that when you're setting up your different accounts, you need to figure out what kinds of rules and plans and everything that you're going to have for that particular account, and then try to stick within what you created for that account, because that's going to help guide your decision making. If we're not specific on what it is that we're trying to accomplish with a particular account, then that's when you start to run into all different kinds of problems and confusion, and that's how you end up ultimately losing. So for this particular account, we're trading intermediate term, and we're trying to hold for the bulk of the move. So we have our stop way down here, and we get this spike down. Okay, it didn't trigger the 50-day moving average, so we're still holding. Oh, on this one over here, it slices below the 50-day moving average, but it ultimately closes back above it. That's another thing too that I like to look at it as well, is where does the stock actually close for the day and for the week? Does it close above or below? So if we're making our decisions toward the end of the day, unless if it actually triggers a hard stop, which would have been down here, then you stick with it, because you could, if it closed down here, then that's a big sign of weakness. But what we ended up seeing on this particular day is that demand came in and it ended up closing near the high of the day. It still closed down, but we're seeing the price tell us that there's buyers here. The chart is telling us a story. It's telling us that, yes, it did slice below the 50-day moving average, and I know that's pretty nasty to hold through if you're looking at this during your lunch, but if you come in towards the end of the day and you see that it reversed and closed higher, then that's something that you want to focus on, and that it's a sign that that weakness is being bought. So we see that here already early, so we're holding on. And to fast forward a little bit, and we're still holding on, here's another nasty shakeout, right? So how do we not sell too early? So let's take a look at this. So we're moving up our support level to, not really to over here, right? Because it was building support, and you could say that this is a support level, right? And that would be where you got shaken out. But it did it over a relatively shorter period of time, 2 months, where our goal is to hold this a little bit longer term and to hold for the bulk of the move. So the shakeout level isn't really going to be over here. It's still down here, right? And we're still looking at not just the support level, but we also want to look at upward trends. So let's draw another trend line. All right, so let's do that with this, and we're all right. So we've got this trend over here. So it breaks the 50-day moving average. It breaks this ascending trend line when we draw it from all the way back here. And when we're drawing these trend lines, the idea to make them more reliable, or for it to be a little bit more of an important trend line, is the more touches you have on a trend line, the more tested it is. And the more tested it is, the more reliable it becomes for a trend. And should we sell or should we not sell? For this, we wanted to continue holding because it's not, well, we didn't want to be shaken out of this position here. It was a tough one to hold through. For me, if I was fully in charge of the model portfolio, I'm probably selling on this one, but Adam decided to hold through this and keep the stop down here at this point. And it was tough to stomach this, but we're also cognizant of other moving averages as well. So we're looking at the 50-day moving average. It comes right down to this moving average over here, the 100-day moving average. So looking at another tool in the toolbox, and it catches support. So at this point it rallies, and then finally over here, that's where we get our big move higher. Did we know that that would ultimately happen? No. But once it started to rally off of that level, we're able to start to move our support level and our stops higher, because then it would be rolling over, breaking another moving average, starting to get resistance at this, and it's basically lining up as many signals that the chart is giving us, and giving us the story of the chart, getting as many things as we can to say, okay, this is a confirmation that this is rolling over and the trade is done. You can see that there's clearly a lot of art in this, a lot of chart art, if you will. But there's really those three key things. It's the trend lines, the moving averages, and the various support levels. And the more they're aligned with your goals, and for our goal, it's to hold this for the bulk of the move, you need to be a little bit longer term. And understand that, yeah, that there's a support level building over here, but until it was tested over here, it wasn't really an intermediate to longer term support level, because it was only tested twice. It was only tested here and it was only tested there. So it needed to be tested again. And if we did just move our stop to that level, we probably would have been shaken out right there at the bottom. So we want to avoid that, and we want to be consistent with what our goal is. And the goal, for the sake of sounding like a broken record, is to hold for the bulk of the move, and that's what we ended up doing. That's why we didn't raise our stop immediately, because we knew that this floor hasn't been properly established. And then after it was tested and then started to rally off of it, okay, now it has 1, 2, 3 major touches of that support level. Now it's a little bit more solidified. And now it's continuing to run. And so at this point, we're able to raise our stops to a little bit below the low of that gap. It was tested over here. We're seeing a little bit more of a consolidation over there. We have this 50-day moving average. We have the 100-day moving average now above that support level. And this is how you can have a little bit more of an understanding of not to give back too much, but to sell at the right time. It's aligning what your strategy, it's aligning your plan and the strategy that you want to have to execute that plan, and an understanding that you're not going to get out at the ultimate top. You want to exit when the trend is over. For us, the 3-strike rule keeps us in the trend for the bulk of the move. And so far, we're up over 60% since we entered this trade on January 19th. Thank you all so much for watching. I truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally help you. Also, if you like the video, click that little thumbs up button. That really helps us out a lot. And also make sure that you subscribe to the channel so that way you're getting all of our updates. Thanks again for watching, and I'll see you again in the next video. Take care. Have a great day.